On today's episode of the AI Investor Podcast from 24/7 Wall Street, we dive into Broadcom's massive surge and check back in on the market's animal spirits. All of that is next. Welcome to the show, everyone. My name is David Hanson. I'm joined, as always, by Eric Bleeker. I know you're feeling a little bit under the weather. Is this your Jordan flu game to bring us this podcast?
The show must go on, David. The show must go on.
Well, hopefully the best medicine for your ailment is some exciting AI news. We've had yet more stocks surge on huge earnings, which we're going to get into. But I wanted to start, like we did a couple weeks ago, with just some of let's take a temperature of the market. There's been, like I just alluded to, some really explosive moves to the upside, especially with some of the companies in our portfolio. But we've also had some weakening internals of the market, if we don't want to get too technical. So it's been yet another interesting 2 weeks. I wanted to get your take on just how are you feeling now? We've had some softness, but there's still some craziness going on in the market. So what's catching your eye from that high level point of view?
Yeah, David, I've previously given on a greed factor. The market was at an 8.5 or 9. We're seeing some of that come back right now, and especially it's coming from the Federal Reserve. They had their Federal Open Market Committee this week. Powell, he kind of changed his tone. He said it was a closer decision to cutting rates this previous time, and we have kind of consensus now at the median point for a rate cut next year in 2025 is 0.5%. We've seen, if you just want to look at something that impacts everyone's lives, just look at a 30-year mortgage. And in September, when it looked like rates were really going to come down, they dropped, I think it was down closer to 6%. And now, David, I think they're at 7.5% again, right? So that's really telling the story. But we did it a few weeks ago. We did our rate at 1 to 10 for some of the froth. So, it's coming off a little bit right now. But David, I went through and I cataloged some of the frothiest sectors I'm seeing of the market. And what I want for you to do is rate them all 1 through 10. So are you ready?
I think I surprised you with some of my lower scores last time. So maybe you can find something even more ridiculous.
I have a prediction what your lowest score is going to be here. And it involves a flatulent cryptocurrency. So we'll see if I'm right on this one. So the first bucket I wanted to do was AI stocks. I went through and looked just for stocks that have added AI to their name. And what I found is they've seen an average spike of 196% in the back half of the year. So I'll give a few examples of this. C3 AI, David, we've talked about them. I find them to be one of the more cynical examples of adding AI to their name. The C in C3 originally stood for carbon when it was a climate change company. Then it was C3 IoT. Then it was C3 Energy. Then it was C3 AI. Fourth time is the charm. It was up 103% from September 5th to this week, December 17th. And it would be one thing if the results backed it up, but the recent earnings, they took their guide for revenue next year up 8 million, but their loss is up 10 million. So, David, you're not making up in volume here. These are not good earnings. We're not seeing a business acceleration. We've got Big Bear AI. It's a business intelligence company. It's headquartered in DC. It's got a lot of government work. It has been up 196% recently. That's just from August 6th to December 9th. The problem, I looked it up, their Wall Street estimates for sales next year have actually gone down during this period. They were 199 million in May, now 192 million. So once again, we're not really seeing business acceleration behind this change. SoundHound AI, I would say it's probably the most exciting business of this bunch, but it's up 319% in the past month. Well, why? One example was they were up 20% on news. They signed a local taco chain, Torchy's Tacos. Well, I'm sure Torchy's Tacos are delicious. My math shows they give about $1,400 per location signing up for their customer service solutions. Torchy's Tacos has 130 locations. So that is 180 grand in incremental sales, give or take, adding more than $1 billion. If 6 figures of revenue is adding 10 figures to your market cap, we have some exuberance. So a couple others, David, we've got Airship AI. I have no idea what this company does. I just saw they were up 35% yesterday. They're up 122 since the start of November. And the last one I found, Bullfrog AI, tiny microcap with 4 employees focused on drug discovery. They are up 205% in the past month. So, David, looking just at companies with AI in their name, the incredible jumps in share price recently, with very few showing added momentum behind their business, what would you give this on a scale?
I'm going to give it a 7, which is high, but to get a 10 or a 9 from me, there has to be a surprise factor. This isn't a surprise. We see this when we have big trends in the market where companies that are very promotional in nature try to take advantage and add that. I think there was this happened in 2017 with some Bitcoin companies. I think there was a beverage company that was like, actually, we're .Bitcoin now. Or so I'm not surprised by it. In a weird way, I welcome it because I do think when you have these companies in the AI space who are trying to capitalize on the promotion, they lead to these, I'm going to call them overvalued companies. There may be some shareholders out there who's like, no, you don't understand SoundHound. I'm going to call it overvalued. I think it can benefit us who are looking for these real businesses that are benefiting AI, because it can be easy to lump in and be like, oh, everything in AI is just a bubble and everything's just inflated. And I welcome that. Sure, if you want to spend all your time looking at this, we're going to go try to find the companies that are real. And again, we've a theme that we've tried to bring to this show is let's talk about the business results. It's great. And again, we're going to talk about some of these companies that are surging. It's usually because they've posted impressive results that have beat estimates or they're raising guidance. So again, it's all a sideshow. It's fun to look at, but would remind our viewers to look at the companies in our portfolio. You're not going to find these promotional type companies. I mean, I think C3 AI, the founder, he's done very well for himself. I think he's got a track record of being a little bit promotional. You can go back even to the .com days. He's had several companies that are trying to take advantage of kind of what's hot. So not surprising. We're going to see this every single market cycle.
All right. Well, I think I've got something that I can beat a 7 here. You mentioned a beverage company. I have quite the former beverage company. So quantum computing stocks. Google just made an announcement on December 9th that has really focused enthusiasm in this sector. If we look at Quantum Computing Inc., D-Wave Computing, Rigetti Computing, and IonQ, since the middle of October, we have Quantum Computing Inc. up from $1 to $17. They were up 2,500% at their peak. We have D-Wave Computing from $1 to $9, Rigetti from 80 cents to $9, and IonQ, the laggard of the bunch, from $10 to $40. Now, David, I don't want to get into the details on quantum computing. It seems there is a legitimate scientific breakthrough that Google had announced on December 9th, and it created a lot of hype. The press release talked about potentially proving the existence of parallel universes. You don't see that every day. But the reality remains there's incredible hurdles to the commercialization of quantum computing. It is still a significant amount of work that needs to get done to ever have one with practical purposes. And Quantum Computing Inc., let's just focus on that. We talked about in our November 22nd episode, where I first had you rate craziness 1 to 10. The highlights of this company was it was a soda company. There is something rhyming here, as you mentioned earlier with 2017, that was purchased out of receivership by a former homicide detective. It had about $400,000 in trailing revenue, but in the past year, it was only able to collect 14% of its revenue. And David, you gave the stock a 9 when it was trading for $500 million. But let me update you. Well, after that last episode aired, it soared up to $3 billion, a jump of 6-fold in less than a month. It is worth noting, as we filmed this on Friday, it was down 41% yesterday. Take it back to a very reasonable $1.8 billion. So, David, let's get your rating on the acceleration of quantum computing stocks.
I'm going to go to 9.5. I'm going to withhold the 10 because I think we have something stupider coming. But I'm going to give it a 9.5. I can't explain the movement in these companies. I would not recommend I'm going to go buy some puts on quantum computing, or I'm going to try to short it. I don't know what's going on, whether there's algorithms trading this or you have momentum shops that are in this name and you're just seeing really explosive moves. So I would stay very far away from it, even if I have high confidence that Quantum Computing Inc. is maybe not worth $2 or $3 billion. I don't think there's a way to play smartly, at least from my perspective, the potential downside here. So I'm going to give it a 9.5, but I'm staying far away from putting money on that side of the bet.
Yeah, and I think the key point is it's not that we don't think there's something deeply fascinating about the concept of quantum computing and some of these advances, but both you and I, David, we've been on the other side of seeing feedback loops that a lot of people don't see in terms of investor interest owning financial websites, working on the biggest financial websites in the world. And I would say your pattern recognition of a lot of these companies in these hype cycles and the type of interest that spins up, it's generally about 90% accuracy when you can tell something is going to rise up and fall. And I would say quantum computing stocks match that pattern recognition extremely closely. So let's get to the last one. I'm going to keep it short and sweet. We're talking about Fartcoin. David, I had sent a Reddit post about a wife bemoaning her husband putting their life savings, about 175,000 into Fartcoin. Well, since that time it is up 500%. Fartcoin as an asset is now worth 1.1 billion. I have nothing further to add. David, what is your rating on Fartcoin?
Fartcoin's got to be a 10. It's a 10. We've reached the level of Fartcoin. And I would love to know if anyone that seriously owns Fartcoin, take a screenshot of your brokerage, send it to us. We'll make some swag to you. I would love to meet someone who actually owns this in any meaningful size, because this is a 10.
Yeah, and at the end of the day, as we were talking about, we're probably seeing a little air coming out of the market right now in light of kind of Powell's comments, the FOMC decisions. It's relatively healthy to see some air come out, and it's not because a lot of stocks don't trade for relatively reasonable levels. We've talked about Nvidia for many people being a poster child of the current market era, but it's actually seen its share price increase less than its earnings. It trades for around 25 times forward earnings right now. So there's two very different things that we're seeing in the market right now. It's slightly, it's elevated levels in market PEs relative to historical precedents, but we are just seeing other sides of the market, these very speculative areas, overheat. So to see some pressure come off, that's relatively a good thing in our opinion. As I had said in prior podcasts, I welcomed it, because the other side of that is if everything overheats too hot, we get a repeat of 2022. You're going to find some outstanding deals amongst the wreckage there. You're able to buy things like Amazon for $80 a share, but you're also going to feel incredible pain where a lot of stocks overshoot, and the market itself at that point was down, I believe, 27%. And a stock like Meta hit $80 a share. So again, some opportunities if that happens, and we will be ready, but all the same, I think that moment feels a lot more painful than you would think it was, just kind of distantly analyzing it right now.
All right, so let's jump into some earnings. We talked about moving to companies that have real businesses and are showing some real momentum. Let's start with one that's in the portfolio, and that's Ciena. Reported earnings recently, and just like many other companies in the portfolio, saw a big jump in the share price. So what did you see out of Ciena, and what does it mean going forward for the company?
Yeah, Ciena. So we're on kind of, if you want to call it, a hot streak. We've had 3 stocks recently we recommended, specifically citing accelerations in their business we wanted to get in front of. That was Marvell, which we talked about last podcast. That was up 23% the day after its earnings. We also have Ciena, which we had recommended on November 8th, and Broadcom, which on the last episode we had said we want in before their next earnings. So Let's just talk about Ciena first. This one will be kind of lighter. It's up 29% in the past month, mostly thanks to that post-earnings jump. Earnings last quarter, they were terrible, right? Which isn't what you'd expect me to say. They missed on EPS, revenue. Most of the time, a stock reporting the earnings they did would be down 10 or 15%. But David, almost everything we're doing, especially in this kind of data center basket we've talked so much about, it's forward-looking. It's when is the company going to talk about a ramp and essentially see its share price re-rate, which is what we're seeing in all these companies. Credo recently had it. They jumped a ton in one quarter, and they said they're going to keep growing on the rate people have been expected after that. So you saw its results from there. In the case of Ciena, they took their fiscal target for the next 3 years up to 8 to 11% growth from a previous of 6 to 8. Again, that it causes a big re-rate, and the opportunity we're looking for in Ciena is data center interconnections. We believe rather than one massive data center that needs dedicated nuclear power, it really behooves companies to work on the technology to be able to get several nearby data centers interconnected. We've seen this from Google. It's underway in areas like Nebraska and Ohio. And the fact that Ciena is taking their projections up, it's because they're talking to customers. Customers are saying that they want to do this. And, they're taking their projections up because of what they're hearing. Now, David, the main event is Broadcom. This was the big stock. We made it in our last podcast, the number one holding in the portfolio. So to briefly review, we kind of see the battle for AI supremacy being between NVIDIA and a company like Broadcom, where it's kind of like Apple versus Windows or Apple versus Android. NVIDIA wants to build an integrated stack. They want from software to their chips to networking. They want that all under NVIDIA. Now, their customers, the hyperscalers, Amazon, Google, Microsoft, et cetera, they want more control. They want to control their AI spending because now it's the biggest cost item. They want open source software. They want flexibility in networking. They want chips that can provide them a cost advantage. So the way to do this is these companies are increasingly relying on Marvell and Broadcom to not only help design chips, but, custom designs and networking, et cetera. So, you can see it doesn't really make sense to design these custom chips under an old way of thinking where you're building smaller data centers. But when you're building clusters with up to 1 million chips connected, it makes a lot of sense. So again, Broadcom, if they had just released their last quarter numbers, David, they would have been down 5 or 10%. They just largely hit expectations, which in the current environment is not good enough. So why did we recommend before the last podcast? Well, the reason is Marvell's been soaring. Broadcom wasn't keeping up, and there was two anchors on the stock. Number one, they hadn't updated their AI guidance for the next year. And second, there's a knowledge of the supply chain that Google's making a transition in their custom chips from Broadcom, where they're moving from a prior generation to the next one. And that's just causing an air pocket where a couple quarters are going to be lumpy. Mm-hmm. So what Broadcom did is on their earnings call, they gave a long-term forecast that blew everyone's minds. Essentially, they said from their top 3 customers, they see $60 to $90 billion in what they're calling a serviceable addressable market. Now, those customers are Google, Facebook, and ByteDance. If you look at the companies buying the most AI server equipment in 2025, Microsoft and Amazon are number 1. But Google, Meta, and ByteDance are 3, 4, and 5. And a lot of people might not appreciate ByteDance in particular. They're a good customer. They actually are estimated to have bought the second most NVIDIA chips out of any company last year, which I bet almost no one here listening would have guessed. So you look at Broadcom and their longest tenured customers, Google, which they're expected to make about $7 to $8 billion from them alone. But it's the 6th generation they've been working on this custom chip with Google. These other companies, they're still ramping with, and the market hasn't quite known how big their spending plans are. Well, 60 to 90 billion, that's so far ahead of expectations because that's just for the chips and the networking, not all the other components and servers. And if they even hit the very low end of, guidance for that, it's way ahead of what Wall Street was expecting. And David, the other thing too is they just have signed agreements with 2 new customers who are believed to be OpenAI and Apple. And those are companies that are expected to see massive ramps in the years ahead. And they're not even included in that 60 to $90 billion number. So, David, when this conference call was happening, we're doing a live blog on Broadcom. Little plug here. We're going to do a lot more live blogs on 24/7. So if you've got companies, especially any of the Magnificent 7, and earnings are happening, just Google 24/7 Wall Street. This next earnings season, which starts in January, we're going to have coverage from our analysts covering all these companies as it's happening. But when the CEO, who's Hock Tan, when he said this $60 to $90 billion number, you can see it on the blog, my brain short circuit, right? I was wondering if that was a typo. And you can see in that live blog, I'm immediately saying they're up 12% right now. If I'm not hearing this incorrectly, they're going to be up way more tomorrow. And they end up jumping 25%. And the next day, another 10, they were up almost 40. And the key point here, David, is this is some real like 4D chess from Hawk Tan, because the reason Broadcom has been trailing, and the reason we were saying we should really add to this before earnings, the reason they're trailing behind is because they hadn't updated their guidance for next year. He knew this quarter they were going to be in this air pocket from Google, and he saved up this long-term guidance because he knew exactly what to do. He knew last quarter. They're talking with customers, these engagements, they're talking about plans 4 or 5 years in the future. He knew this, but he wanted to save it because he knew otherwise they would have bad narrative about falling behind. And he knew this moment needed to be right here. So David, you're always investing in the company and the opportunities, but you're also investing in leadership. And Broadcom's CEO, he's taken a small company, he's basically parlayed it with a series of acquisitions into a magnificent 7-size company. And I really believe he's putting his face on the Mount Rushmore of investing right now. And the move he pulled off in those earnings, it just further cements it. I was extremely impressed.
Yeah, I mean, we've talked about a few months ago, is Broadcom, are they the new member of the Mag 7? And I think in the last couple of weeks, it's cemented that they are now a household name, over $1 trillion market cap. So this is a serious player. And when we think back to 2024, even back to 2023, in the world of AI investing, everything was NVIDIA, right? Mm-hmm. It was any dollar that was being spent on AI, NVIDIA was probably getting a big cut of that, whether it was, through the chips or through the software, everything was NVIDIA. And now they have Blackwell coming out, a lot of demand there, but also supply constrained of saying, hey, it's going to be a while. How much of this surge of Broadcom interest is companies saying, hey, we just can't wait on NVIDIA? Or versus how much is them saying, let's actually we want to diversify away from NVIDIA? Or is it a combination of both? Or how would you kind of slice the pie of why is Broadcom all of a sudden becoming, 40% move on this guidance? It's just massive for a company of this size. So what do you see as the biggest catalysts of why this wasn't seen 6 to 12 months ago from investors?
Yeah, I mean, it's a great question. First and foremost, I think things are still positive. We're not removing the NVIDIA that we have. I think they're still set up for a pretty excellent 2025. Now, second on that, what has shifted? I think the scale increasing is definitely shifting. When you're constantly kind of taking up projections and where this market's going, that's going to adjust things. There's also been an adjustment towards inference. Before, having a general purpose GPU, which is what NVIDIA makes, it's more flexible. And now that we see kind of the market maturing a little bit more, you can move a lot more workloads to these custom chips. The final point here would be Google's been the most aggressive on this front. They have worked with Broadcom for 6 generations now. They're training their cutting edge models on their chips that they've made with Broadcom. They're investing more in Broadcom chips than NVIDIA chips. And I think the other hyperscalers just see this as a potential competitive advantage they cannot afford to fall behind on. You see Amazon spending incredible amounts of, its press on its new chips. It wants to promote that it has its own custom chips. It can be cheaper as well, right? If you are not going into kind of building out custom processors and custom networking, and your cost structure is fundamentally worse, you might be losing the battle for supremacy of the next decade. So if you're one of these companies, in a way, NVIDIA is the best solution at this moment, because you look at XAI, why were they able to stand up 100,000 plus GPU cluster in 19 days or whatever the stat is? It's because they basically went with all NVIDIA gear. I mean, it made it as quick as possible. But the other question is, staying something up fast right now versus what's going to be your long-term advantage might be two different things. So I think there's every incentive in the world for these large companies that are kind of defining spend, they are the majority of spend, to want to control their own destiny. And having your own kind of custom chips where you're partnering with Marvell and Broadcom allows you to do that.
Do you think it's likely that rather than thinking about, I know NVIDIA and Broadcom are maybe not, they're not directly competing on every aspect, but if we think about a pie of spend, rather than Broadcom maybe taking a large share of that pie, do you more see it as, hey, maybe just the overall pie is going to grow and these hyperscalers, we're just going to see more spend of companies saying, we're still going to invest a ton in NVIDIA, but we're also going to invest in Broadcom solutions as well?
I think that's it. You know, Google's still buying NVIDIA chips.
Right.
You know, one of the things, though, an interesting subplot to this, last quarter, Broadcom, they said their AI networking is growing at 158%. NVIDIA's was 20%. So keep that one in mind. And little spoiler, that's kind of a reason that we like owning Broadcom versus some other alternatives we'll talk about later.
Well, I want to move to another company that you just hit on briefly, and that is Google. This is a company a few shows ago, I think I asked, what's a company that you're not very excited about their AI outlook? And not to hold your feet to the fire and remember everything you've ever said, but I believe you said Google. And there's been it's been a rocky year for Google. There's been some, they had some bad PR over some stuff. Felt like, hey, did they just totally miss this AI wave? And has ChatGPT just grabbed so much consumer market share? And is search dead? Is the traditional search just something that we aren't going to use anymore? Necessarily hasn't gone that way completely yet, but a lot of negative sentiment towards Google. But in this last couple of weeks, again, you mentioned the quantum computing chip. If anyone can decode what that press release was, great. But there's a lot of enthusiasm around the innovation there. And then also on the AI side, it seems like they're starting to get their groove back a little bit. So do you regret saying that Google is the disappointing company in the AI space? And is their trajectory looking a little bit different than it did a couple months ago now?
Yeah, I mean, definitely that was just wrong, right? You're not going to get every single call right. The nice thing about investing, though, if you get a call wrong, it doesn't mean that you're betting against it. It just means you didn't have it in your portfolio, right? So the big reason I was concerned about Google wasn't because of what it's worth. I even said at the time, if you sum of parts Google, it's extremely compelling. You've got its potential in AI. You've got Google Cloud is outgrowing in terms of growth rates, Amazon and Microsoft right now. YouTube's an exceptional property, and search is tremendously valuable. It's just a question of how under threat it was. And my main concern was its leadership. It seemed like culturally the company wasn't moving as fast as it should be. It felt like it's kind of, for lack of a better word, settling into its Microsoft Bulmer phase, right? But to what you said at the beginning, they are furiously shipping right now. I mean, Waymo, let's talk about Waymo. Waymo seems to be in a two-horse race with very different strategies with Tesla right now. There was the quantum computing announcement. Google Cloud, we just talked about how they were the first to this custom chip opportunity everyone's racing into. They've shipped new video models. Their video model looks better than OpenAI's and doesn't look particularly close. They've done image generation tools. And the big thing is they announced Gemini 2.0, which is kind of their foundational model. So all this happens too. If you want to talk about this 4D chess between companies, that's kind of exciting to watch. All of this is going on while OpenAI is trying to do kind of a 12 days of Christmas thing where they're doing a lot of product announcements. They announced search, which normally would have really cratered Google stock, but they've been so far out in front of blunting these announcements. And they're going to finish today with what should be a new model. So I think it's been a massive change. I don't know if we'll recommend hyperscalers on the show. And it's not because I don't like them. I own them. It's just they're so big that it feels like a little bit of a letdown to be like, okay, 20% of our portfolio is Amazon, right? And maybe we will do that if it's just compelling enough. We might go there, but it's never been because we don't like these stocks. It's just they're a little obvious, and we're kind of trying to present more novel opportunities. But Google. I think if my reticence towards the company has been leadership, they've certainly done a lot to change my opinion in the past couple of weeks.
Well, I think a company like Google too, that it's easy to forget. And the same thing with Meta and Microsoft is these companies have enormous distribution. If they have new products, to be able to get them in front of consumers quickly is such an advantage. You look at OpenAI and ChatGPT, it's a little bit unique that they had such a breakthrough and had something so unique those couple of years ago that it was able to break through and get to that scale at the consumer level of where it did become a household name. That's very hard to do versus Meta, Google, Microsoft. They have distribution that's incredible, that even if their products are not great at first, they can massage them and get better. I mean, there's a lot of products in the Meta history that have not been great, and it's kind of just been through blunt, improvement and repetition, and Zuckerberg kind of just forcing it to market. So I think it's easy to forget that the power of that these large companies have to bring new products to market.
I mean, Meta's name is a product they don't even talk about anymore. If that shows your ability to take some risks and miss, I don't know what else is.
So let's talk about a company. You said the hyperscalers are not in the portfolio. Let's talk about another company that is not in the portfolio. And this is a listener question from Justin. He says, why don't you have AMD in the portfolio? If you have NVIDIA, Broadcom, and Marvell, it seems like the one stock you're missing in that category. AMD, a large company, a company that has not performed well from a stock price perspective over the last couple of years, surprisingly, given everything else that's gone on in the market. So why is this company struggling? And why is it not in the portfolio? If it seems like, hey, there's so much froth in the market, it's like, all right, here's a company in this space that's down year over year. So what are your thoughts? Why is AMD not in the portfolio?
Yeah, it's really interesting, right? My background with kind of investing in the space, I was really into NVIDIA around 2010 to 2012. They were beginning to talk about, back then it was all professional work, but they were starting to talk about the beginnings of AI and working with researchers. We visited the company again. I met with their executive team in the summer of 2015. They really did a great job laying out the deep learning opportunity. And across the next year, when we had worked at Full.com, we did a lot of presentations, and we really got the story for NVIDIA out there. But I never owned AMD. I bought NVIDIA at that time, but I never owned AMD. So it was a mistake, right? Because it was always the number one stock in the market for a long period was NVIDIA, and the number two stock was AMD. And I guess I was lucky enough to see the number one stock, but I didn't see that AMD would likely come along for the ride just by merits of the market rising. So, the question I've had to think about is, am I making that mistake again, right? And you look at this year, probably one of the reasons that AMD has underperformed is, they're still trending towards about $5 billion in AI revenue this year. Well, as I mentioned earlier, Broadcom's going to make probably 50% more than that just from a single customer, Google alone. They also reportedly have had some, struggles. They reportedly are giving away some of their capacity at Taiwan Semiconductor, and that's being picked up once again, reportedly by NVIDIA. And the street's expecting them to see roughly a double in AI revenue to 10 billion next year. I'm not sure they're going to get there. And that's why their price is down. But again, it has to be, is there something happening that the market's missing right now? One of the challenges for AMD is they've made some acquisitions to try and get into the networking game, but they're missing that component. So if I've got alternatives with Broadcom and Marvell, well, I not only have the custom processors, I also have them increasingly working on not only networking sales, but many custom networking chips as Marvell's now winning with customers like Amazon. And, it's just AMD, they're not expensive right now, but I haven't seen the dynamics break in their favor as much as we would have expected. You would expect some movement towards these other companies to also result in large hyperscalers wanting to diversify to AMD. But some of the reports are actually Amazon maybe struggling to fill utilization on their AMD chip. So I'll continue watching. Right now, there is a ton of movement around, as we've talked about in our episode detailing our scaling laws dead, there's a ton of movement in basically how you build AI models and what kinds of companies will be the most valuable to that. And that could break in AMD's favor. I just haven't personally seen it yet. So we're not going to be adding it right now. But I also think if I see something that changes in the next year, and I think AMD is going to see acceleration, we'll move very quickly on that. I just haven't seen it yet today.
All right, let's move to a company and wrap things up with one that you do want to add to the portfolio, a newer company, more of a software type company, and that's Snowflake. So let's walk through the case on Snowflake. What is it? It's a company that's been public for several years now. It kind of came to the market with some, I think Berkshire was a larger shareholder. So it was like, oh, Buffett likes this tech company. I think it may have been one of his lieutenants, but it's a company that's been around for a little bit. Let's talk about what it does and kind of how it fits into this portfolio quickly.
Yeah, like you said, we'll keep this one pretty quick. I'll probably do a more in-depth article on 24/7. So if you Google 24/7 Wall Street, you go to our site, there's a section AI portfolio. I am putting writings. I did a more exhaustive look at Marvell prior to their earnings, detailing it. So, if you want to look for writing, you can also get more than the podcast there. So Snowflake, let's talk about the opportunity. It's we're going to add $10,000 to it. It's ticker SNOW. It's not hard to find. If you're wondering what Snowflake is, it's a data platform. It IPO'd in 2020, the latter half, as David mentioned. It was one of the hottest stocks in the market. Shares shot past $400 per share. But as opposed to many other stocks that we've added to the portfolio, that you look at the recent stock chart and you get a little nausea, like, oh, this thing's really going up. Should I be adding? Snowflake's been different. It's struggled. It bottomed at $107 per share this summer. It is back on the uptrend. It just had great earnings. But the big picture is it's still down 16% the past year. So it's not a stock that's been doubling or tripling recently. Now, David, as we've talked about before, when I'm looking at new markets, I first approach it thinking less about the individual stocks versus just trying to understand the theme and get the theme right. Because if you were looking at how data centers were rebuilt for the age of AI, some stocks, they will have gone up more than others. But if you pick stocks in the center of the theme, you generally just made a lot of money in the past year, right? So I've been thinking about how to approach agents in software, as we've talked about in previous episodes. And you have companies out in front kind of driving some immediate narratives about their products. The big one we've talked about is Salesforce. But the more I look at it, I'm just not seeing as many ideas as I like. There's always companies you need to squint and see if they could add an agent function to their product. Not that they have anything today. And, that's a tough guessing game. Adobe in 2023, it talked about embracing AI. And it did very well, but it's doing very poorly in 2024. And, you've got defenders of it saying its software is as essential as ever. But I mentioned earlier, Google now has an image tool where you could create images and they just semantically edit it. You don't even need a tool. You can just say how to fix it and it fixes it. That's a huge threat. So I think we still have that a little bit to software in general. And my best guess is you want to start that base layer. So when AI first took off, the base layer was NVIDIA chips, as you talked about earlier, David. And then it was data center. And now we're hoping it will be software increasingly. So the base layer, as I see it, is kind of this data layer. You need a strong kind of almost data backplane. And as Snowflake has said, AI and machine learning are going to go where the data is. Data, they've said, has a strong gravity. I like that framing of it. And I think Snowflake is the best investment of companies you can buy shipping AI product lines. Their core offering, it's Cortex AI. It's got features you'd expect like copilots, but keeps expanding. They just added data search and new features. They only announced this product a year ago. And it's, you saw the results last quarter. It's starting to show up in the results. And they're building capabilities in taking data stored in Snowflake and then taking it to LLMs, which can be directly fed into applications. So you think about data as this core feature and companies using it for an output of applications and agents. And I think Snowflake's just kind of that core layer that a lot of these companies can build on. So, David, I think too, they're just working on text. They're going to be able to move to unstructured data. So that's video, images. They've got a lot of opportunities. And we're just going to start with $10,000 on this. We're going to approach it kind of as that base layer, as I noted. And I'm going to just keep watching for other companies that maybe can take that next step beyond it. But I'm happy to start with this company, especially since our software offerings to date, like Cadence and Synopsys, they're software, but they're also still aligned to the semiconductor industry. This gives us some software that's away from semiconductors, and hopefully it begins giving us some exposure to that kind of next wave of growth. So happy to add Snowflake today.
So I just talked about Google's distribution, Meta's distribution, these companies that have it. Do you see that as what makes Snowflake attractive in terms of this is a company that's used by large Fortune 500, smaller private companies in terms of understanding their data. Think about a CEO being there like, I want to, how are we using AI? And you see this as a natural point where they already have these relationships with large enterprises that they can start to build new services and use that distribution to bring, additional business, additional lock-in, additional revenue. Is that the benefit you see?
Yeah, correct. You think about Palantir, which is the best performing kind of software stock. I own Palantir personally. We put it at front center of one of our reports at the start of this year for AI. It's gone up a lot. The valuation it's a little hard to start at this point. And the biggest challenge for Palantir is they need to send people essentially to boot camps, right? To be able to figure out how to work with AIP, which is their artificial intelligence platform. I think one nice thing about a Snowflake is they're not the same as Palantir. They're very different companies. But like you said, they have that initial distribution and they're shipping extremely quickly. So I like them as a base layer for a way for companies to be able to, they're going to need to access their data for a lot of these agentic capabilities. And I like that they're going to be able to just basically tie the capabilities to make it easier for companies.
Yeah, and just to give some perspective, Snowflake has a $55 billion market cap, which again, a couple of years ago when it went public, I remember it was like, oh my gosh, insane valuation. So far, how far we've come when it's quaint to be a $50 billion market cap. Palantir is up to 175 billion. So to give you some kind of perspective on the market caps, 50 small these days. But yeah, so we're going to add Snowflake to the portfolio. That's all we have for this show. Hopefully that was helpful to hear about. I think Broadcom, like I said, is going to be this name that is not going away in 2025. I think we're going to hear a lot about this showdown between Broadcom and NVIDIA and where is this market going, because it's going to have a lot of impact on real dollars, but also those future expectations. When we tie it back to NVIDIA talking a lot about what does 26, what does 27 look like, that multiple, it feels like it's going to be very predicated on what's this dynamic of where is spend going and our expectations can be higher or lower. So exciting to see Broadcom kind of take center stage alongside with NVIDIA. So this is our last show of this year. We'll see everyone in the new year. Eric, anything else before we sign off for the holidays?
No, I just, like I said, we appreciate our listeners. As always, if you can give a review or spread the word, we always appreciate that. We are still, as we are seeing with the jump of Marvell and Ciena and Broadcom, at early stages where it's very exciting. So, don't be afraid or intimidated of getting started. We see a lot of opportunities, and when you're this early into a trend, you've missed some things, right? You've missed the majority of NVIDIA's gains, but there's a lot of ways that this is going to flow through that should be another very exciting year in 2025.
All right, we'll see everyone there. Happy holidays. People on this show may have interest in the stocks they talk about. This is not investment advice, so don't buy or sell based solely on what you hear.